So, as we had said at the beginning of the chapter, the purpose of technical analysis is to forecast the future movement of a stock. In that prediction, one of the signals we are interested in detecting is the one that indicates that there may be an increase in the stock price. That is, we talk about a bullish signal. According to technical analysis, when the stock meets the following criteria, it is very likely that the stock price will increase. Stock price at support level or at lower channel line, and increase in volume. These criteria indicate that the stock at this price is very attractive to buyers. This indicates that the stock is very likely to end the descending cycle and the price will start to rise. When we detect a bullish signal, it is the best time to open bullish positions or close bearish positions. Of course, the stronger the support level of the lower channel line, the better. Let's consider the following example. Here we can see a chart of the Apple Company. On the left side of the chart, we can see that around $315, a support was formed, indicated here as support number 1. In turn, we can clearly see that at the time the stock touches this support, an increase in volume has been taking place. Clearly, this is a bullish signal, and therefore it was likely that the stock price would increase as it finally happened. On the right side of the chart, we can see what is indicated as support number 2. Notice that the first test of support is accompanied by a large increase in volume, which was giving us a bullish signal. This rise in the stock price did occur. After it, the stock began to fall again, touching support for the second time. In this new test, we can see again an increase in volume. So here we got another bullish signal. Here's an example with a sideways trend channel where the lower channel line acts as support. Notice that the first test of support is accompanied by an increase in volume. This is clearly indicating a bullish signal. During the second test, there was also an increase in volume. This indicates again a possible increase in the stock price. Finally, in the third test, the same thing happens. The stock touches support, and this is accompanied by an increase in volume. So, in this example, with the chart of General Electric, whenever the stock touched support, and this was accompanied by an increase in volume, a rise in the stock price was actually confirmed later. Here's an example of an uptrend channel. As it is indicated here with a blue circle, when the stock touches the lower channel line, this is accompanied by an increase in volume. As previously seen, when there is a test of the lower channel line, and this is accompanied by an increase in volume, we get a bullish signal. As can be seen here, this rise in the stock price did occur in the following days. Now, let's see when we get a bearish signal. According to technical analysis, when the stock meets the following criteria, it is very likely that the stock price will decline. Stock price at resistance level or at upper channel line, and decline in volume. These criteria indicate that the stock at this price is not attractive to buyers. This indicates that the stock is very likely to end the ascending cycle and the price will start to fall. When we detect a bearish signal, it is the best time to open bearish positions or close bullish positions. The stronger the resistance level or the upper channel line, the better. Let's consider the following example with real values. Notice that the stock found resistance at the value of approximately $14. In turn, as shown in the blue circle, when the stock touched resistance, it was accompanied by a decline in volume. At that time, we were getting a clear signal of a fall in the stock price, which actually happened in the following days. In this case, we are analyzing the chart of the Amazon company. Notice that a resistance was formed at a value of just over $190. When the stock touched resistance for the second time, this was accompanied by a decline in volume. Clearly, here we got a bearish signal. This fall in the stock price actually occurred in the following days. In this case, we are analyzing a bearish signal that occurs within a downtrend channel. What we see here is how the stock fluctuated within the lower channel line and the upper channel line. This blue circle indicates when the stock touched the upper channel line. That moment is accompanied with a decline in volume, so we would expect a drop in the stock price. This fall actually occurred in the following days. To clarify the concepts already seen, let's review the criteria to get bullish or bearish signals according to technical analysis. By predicting the movement of a stock, the best probability of success is given when the stock meets the criteria previously seen. We get a bullish signal when the stock price is at its support level or at a lower channel line, and this is accompanied by an increase in volume. And we get a bearish signal when the stock price is at its resistance level or at an upper channel line, and this is accompanied by a decline in volume. If the stock is not near their support or resistance level, it is more difficult to make a prediction with a high percentage of success. That is why it is recommended to make the predictions only when the previous conditions are met, because it is when we have the highest probability of success. However, it is important to analyze some interesting cases. If the following conditions are met: stock price at resistance level and high volume. Remember that in order to get a bearish signal, when the stock price is at resistance level, there must also be a decline in volume. And in this case, we have the particularity that the volume is high. Well, that means we must wait to make a prediction with a high percentage of success, as there are still many buyers interested in purchasing the stock at that price. As long as this remains, the stock price may continue to rise. Of course, if the upward movement stops and it is accompanied by a decline in volume, the stock will be a great candidate for a bearish position. In this image, we have an example of what we just said. In this case, it is a clearly defined resistance level at a value of approximately $127. And as it is indicated in the blue circle, at that time, the stock touches resistance, but notice that in the volume area of the chart, we can clearly observe a high trading volume. As previously said, in this case, we are not getting a bearish signal because there is not a decline in volume. So in this case, in order to get a bearish signal, we must wait for the upward movement to stop and the volume to start decreasing. Another interesting case is when the following conditions are met: stock price at support level and low volume. Remember that in order to get a bullish signal, when the stock price is at support level, there must also be an increase in volume, and in this case, we have the particularity that the volume is low. Well, that means we must wait to make a prediction with a high percentage of success, because even at that price, the stock is not attractive to buyers. As long as this remains, the stock price may continue to decline. Of course, if the downward movement stops and it is accompanied by an increase in volume, the stock will be a great candidate for a bullish position. Let's see this in an example. Here we can clearly see how the stock defined a support level at a price of $4.5. Notice that despite the fact that the stock touches support, the corresponding volume is very low. As previously said, in this case, we are not getting a bullish signal because there is not an increase in volume. So in this case, we must wait to make a prediction. Another interesting case is when the stock price is in downward movement and near support, and this is accompanied by a high volume. That means we must wait to make a prediction with a high percentage of success because it is a sign of a panic sell-off. Sellers clearly outweigh buyers, so the stock tends to keep going down. Of course, if the downward movement stops and the stock stabilizes at a price creating a support, accompanied by an increase in volume, it will be a great candidate for a bullish position. Here we can clearly see how the stock was in a sharp downward movement, and this was accompanied by a high trading volume. This is indicating that the downward movement is a panic sell-off. Of course, if the stock price stabilizes and establishes a support, and this is accompanied by an increase in volume, the stock will be a great candidate for a bullish position.